All right. Hi, everyone. Welcome to day two of the Synergy Traders number 53 event. This will be Fibonacci and Elliott wave trading strategies. So we're in day two of a 3-day event. We had a great day yesterday, 10 sessions, and we have another 10 sessions today, and then another full day tomorrow. So this event is brought to you by fxtradersedge.com and TradeOutLoud.com and hosted here on TimingResearch.com and along with our co-sponsors, which includes Markus, our first presenter of DowHowTrading.com, and our other co-sponsors, MadHedge, FunTrader.com, TheDisciplinedTrader.com, LogicalSignals.com, eManyMind.com, and MoneyMentor.com. So just a reminder, of course, all of these presentations are for educational purposes only. Trading is not suitable for all people, and please consult a financial advisor and only trade with money you can afford to lose. All of these sessions are being recorded individually, and along with the full 10-year history of TimingResearch.com events, they will be available on Timing Research. Also, if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you can find the recordings there as well. So I'd like to go ahead and turn it over to Markus Gabel, our first presenter today.
Thank you very much. A wonderful good morning and greetings here from the dark Bangkok. As you can see a little bit in my back here, it's 9 p.m. in the evening, so we're a little bit in front of you. And I'm really glad to join this great event here from David. And my part is today to talk about Fibonacci as well and how to win every prop trading challenge. Why we talk about this topic? Because it's a complete new industry. And it's very interesting how this popped up now everywhere, this prop trading challenge. But there are many traps you can fall in. And we want to talk about it, how to win every prop trading challenge with a really serious and interesting strategy, which includes, of course, Fibonacci. So we want to switch a little bit between the slides, and of course I want to show you my real results because I do challenges also, and of course I want to give you access and show you my trades actually in my charts. I don't want to talk so much about myself because that's not really that interesting, but I do trading for 26 years almost right now. I had and I still have 4 mentors and 4 teachers. And I have to admit, without my teachers, I would not be here, of course. Basically, I would say you can teach trading by yourself, the technical part, but I guess you made the experience in the meantime that trading is a game of math. It's a game of probabilities, and it's always hard to close the gap on the right edge of the chart between what you know and what you should do. And this gap to close, you cannot teach yourself unless a lot of time and a lot of money. And both we don't have. So the other one, I'm a German guy, by the way, so my English, I hope you will understand it. I do my best. And but you should know that and you should consider this. I'm looking forward to seeing all your questions in the webinar chat. You can ask me whatever you want because there are no secrets in trading. Or maybe the biggest secret is that there is no secret in trading. There is a holy grail, but there is not the holy grail. There is a holy grail, and this is you. The holy grail is really you. All success in trading is still in your hand. And there's always the gap between knowing and doing. And today I want to show you a little bit how I do my trading and how you can win prop trading challenges, how you can increase your account, how you can make money on a kind of simple way. It's never easy, but in a simple way. And I want to start with a quote. Here we go. Where is it? So with a quote, And yeah, in trading, you must behave like an idiot. You might say, what the hell does that mean? Yeah, basically it is like it is. That's the description of craziness. You can Google it if you want. You can ask ChatGPT if you want. What means craziness? Craziness means doing all the time the same thing, but expecting different results. So the difference or the opposite of craziness is acting in a reasonable way. Reasonable means, okay, I do all the time the same things and I get the same results. Like you cook a nice meal and you have your ingredients there and you know, okay, if I do always the same, I have a delicious meal. The difference of trading, the difference to trading is that you have to act in a crazy way, like an idiot. Yeah, like really an idiot, a smart idiot. That means, okay, I just work with probabilities. And that means, okay, God's sake, I have to follow my rules. I have to do all the time the same things. But I know every result is different from the previous one. And this is like acting or behave like an idiot and to accept it. It is like accept the inevitable things in trading. And this is one of the inevitable things that you cannot expect exactly the same results in every trade. It is not possible. And this is, to be honest, I guess this is the biggest reason why people and most people fail in trading, because they don't understand the law of probability, the law of coincidence. And this is what we talk today a little bit. And we go into the charts, of course, that you can see how it works in real. But I love this quote. I talk this to my students too, because I'm a teacher, of course. I'm a real trader. I do trading for a living for many years. And I'm a trader for an asset management. We have an office here, by the way, in Bangkok. And we have offices in Germany and in Tokyo, actually. And we handle really huge money. And this is a little bit different, and never mix institutional trading to professional to private money. This is not that's you cannot mix it, and you cannot compare it. Sorry, you cannot compare it, because in as we do here in asset management and we act with huge money, it's completely different. Because if you're an employee like me in an asset management, you don't care about the results as long as you stick to the rules the manager give you. Or the asset management says that's your rules, that's you have to do. So, and then time is on your side, because you have an account, you have under management money, and then you do every day your job. And at the end of the month, you get your salary. Yeah. And maybe you get a provision if you had a good month. But basically, you don't care. You don't care about the result of the trades as long as you stick to the rules and you follow the rules of the asset management. Because at the end of the month, you get your money. Completely independent from the results of trading. This, ladies and gentlemen, is institutional trading. It's completely different. The only thing is you have to follow the trading rules. That's all. But no one cares about the result, because everybody knows, okay, if you stick to the rules, if you follow the trading rules, on the long run, there is money. Yeah. But no one cares if you make money every single month, every single week. No one cares. You have just to follow the trading rules of the asset management. And at the end of the month, you get your salary. So, and that's different. As a private trader, you are dependent of your money. You want to make money every day, every week, and maybe you want to make trading for a living. Then you are forced to make money every day, or maybe every week or every month, because you have to pay your bills, you have to pay your invoices, you have to pay to live. And that's completely different. So if you hear something else online or in any webinars or videos, something like that, you have to act like an institutional trader, like the professionals. No, you don't. The only common bottom line is to follow trading rules, but that's the end of the common bottom line. Yeah, the rest is completely different. And believe me, I know it because I trade for an asset management. I am an institutional trader and I'm also a private trader. So I have the comparison. So I know what I'm talking about for many, many years now. So actually, and I teach people in private trading, and I know what institutional trading also means. So this you should know that there is that you never mix it, and you don't listen to people that tell you the story. You have to act like an institutional trader, and you don't. Yeah, the only thing is trading, follow the trading rules. Yeah. So what I want to talk today is big money, who and how makes big money in a financial market. How is this possible with every trading rules? We need to know that. And then you will see the difference between huge money, institutional money, and you as a private trader, completely different. So if you are a trader with a smaller capital, small account, and a small capital. So first of all, what is a small capital? Okay, yeah, it's kind of perception. Yeah, everybody knows that. So I don't know how huge is your amount, your account, your private account, maybe $10,000, 50,000, whatever, but that's small. It's small capital. So the average around the world, by the way, is around about $6,000. It's the average of all private traders around the world. $6,000, that's not really much money. So that you can have a little bit of number. The smallest account I manage under management in the asset management, for example, here in Bangkok, is $12 million. 12 million, it's the smallest account, $12 million. And then it's going up. So, and the average of private trader account is $6,000. So maybe you have a little bit more. You have 20, 25, 50,000. That's still small account. So, but in the average, it's around about $6,000 until $10,000. So traders small account. And on the other hand, we have the investment banks and the funds, the mutual money and asset management, something like that. So the difference is if you have a small account, you're really limited in your actions. You can just have less trades. Yeah. And that's the big problem, because if you have a small account, and it doesn't matter which rules do you use, Fibonacci, Elliott waves. By the way, one of my teachers is still in my apartment here in Bangkok. He makes his stop here for 1 week. Actually, he's on the road, but he's an Elliott wave trader. And we always make fun to each other, because even I say to him, if I want to see waves, I go to the beach. So, but I say, okay, show me your stupid trade. Yes, I show you. But I'm a trend follower. Yeah. So by the end, we have almost the same results. And that's kind of funny. But he was teaching me, he's my boss in the asset management here in Bangkok and in Tokyo. And he was teaching me how to trade with wealth money, with huge accounts. So, but if you have a small account, you're really restricted in your trading. And this is why so many private traders just trading one product, just the Dow Jones, just S&P 500, or just Euro dollar, or whatever there is, because they have a small account. Yeah, and that's a big problem, because after a few times, you know how the Dow Jones is running, something like that. But that's private money. If you have a large account, if you have at least 50,000, and that's what we talk about, at 50,000 roundabout there, we start with a little bit more money. Then you can work with different strategies, not only one strategy. Maybe you can use Elliott waves. Maybe you can use Fibonacci rules. Maybe you can use Bollinger Bands or something like that. Or maybe like me, a trend follower. So I'm a pure trend follower, like the turtle traders in the 80s, and maybe they are well known, especially in USA. the turtle traders, and I'm one of the followers. I'm a Dow trader, but I use the same rules, trend following. And this is still one of the simplest strategies ever. So, but if you trade with your own money, then I'm quite sure you know that, then you are always forced by your emotions. It's completely normal because maybe the family gave you the money, or you earned it, or maybe it's from whatever where you get the money. It's your own money, and you're always really emotional connected to your money, and every single dollar you lose hurts. I know that because I lost so much money in my life. I lost literally everything, inclusive my family and almost my own life. And this is cause trading with emotions. But there is one quote I teach my students every day. Your emotions might never influence your trading. Never. And then there are people that tell you the story you have to turn off your emotions in trading. Guys, to be honest, how should this be possible? How is this working? How you will turn off your emotions? Are you a robot? Are you artificial intelligence? Are you an AI? I'm quite sure if you're a listener today from this great event from David, you are not. I guess you are a human being, which means you have emotions. In every second you are awake, you have emotions. And when it comes to trading, you have strong emotions. So you cannot turn off your emotions. The only point is what you can do. You can control them. And this is possible with logic. This is why all my trading is under the slogan, logical trading. Use your logic, how it works. And that's what we talk about today, the logical trading. But this is a problem if you trade with your own money, that you are forced by your emotions because you don't want to lose it. Yeah. If you have funded money, if you're trading with companies' capital, why you should have much emotions? Why? Not necessary, because not your money. You get money that you trade. It's a difference. It's a big difference, ladies and gentlemen. And that makes the difference in trading when you are at the right edge of the chart. Yeah. So, for example, yeah, actually, look, here we go. So this is just a profitable trade we did in gold this morning in my company, as you can see here. So entry, stop loss above, exit. Yeah. This is a mathematical approach I will show you during this session. Yeah. I'm in Champion Beach, Pattaya now. Yeah, greetings. Greetings to Pattaya. Yeah, actually we have raining season. I love it. And it's raining right now as hell. But that's really cool. It's comfy. So you see, this is one of my challenges, and you see the curve. For example, I was close to reach the next level, then I had a couple of minus trades, and now I'm on the way back. So you see the next level is level number 4. It's just one of that. I have 5 or 6 challenges running together with my students because we do it together. That's a big difference. Yeah. So you see, it's a difference if you trade with your own money, if you have funded money. Yeah, then you don't have so much emotions because the only thing is to know it's not your money. Just have to trade and to follow the trading rules. So to make as many people make you the promises online on Facebook and Twitter and on TikTok and on Instagram, yeah, becoming a rich trader tomorrow, that's a big lie. It's just an illusion. Yeah, earning $1 million on $1,000 account is practically impossible. It is impossible, not in this life, not on this planet Earth, not in this universe. Yeah, if you make 1 million from $1,000 account, I guess you will need a whole lifetime for that. Or maybe it's by chance, but this is not repeatable. This is absolutely not. But on the other hand, earning $1,000 a day from a $1 million account, that's real. Or maybe $500 or $200 a day from a 50K account. This, ladies and gentlemen, that's a real story. And this is what we are doing here every single day, and what every professional private trader is doing also. So how is the way how to do that? It's not really that complicated. Yeah, you don't need so much information. It's just really simple. So the first of all, what we have to do is risk a less risk. That means, let's see, where's the problem? If you have a small account like $500, $1,000, $5,000, the problem is that you have high expectations, because everybody is telling you the same story. Yeah, you can double your account and you can make money a lot. With your $500 account, with your $1,000 account, you can make money really, really a lot. So that means if you are a newcomer in trading, then you have this high profit expectations, because you have the dream, or you dream the dream that you make money with trading. So you have automatically profit expectations kind of high, because then you expect, okay, I can double my account, 500 to 1,000, then 1,000 to 2,000, then 4,000, 8,000, 60,000, 32,000, something like that. Yeah. Basically, to double your account, it's possible. I did it. Yeah. Once or twice in my trading career with a small account. Yeah. But how will you double your account with a $1 million account? How is this possible? Yeah. Also, stupid ideas. But basically, as a private trader, with a small account, you have high profit expectations. And to reach your expectations, you use a high leverage. You use a broker, maybe not only restricted by 1 to 30, 130, 120, 130, no, 1,500, 1,700. But you don't consider, or most of the newcomers don't consider, that the leverage is working in both directions. Not only in the profit direction, it's also in the loss direction. And very quick, the account of your private money is done. Yeah. So, and as a consequence, this cause and effect is always like our universe is working, our whole life, our entire life is working like cause and effect. As an effect, you have a gambling attitude. You are not focused on the roles. Yeah. And that's the point. So, and what do you risk? Completely your own money. That's what you risk. You're always in risk with your own money if you trade with your own account. So tell me why you should do that. We are living in 21st century. We have many, many other options in the meantime. So, for example, this is just one of my partners, Xavier Trade, because we have many prop trading companies, or maybe also in USA, there are complete new industry with companies that give you money. So there's a background story why this prop trading is basically there. First of all, it's a business model. That's not the problem. So it's a business model, but there is, from the money givers, the investors beyond the prop trading companies, is mostly they're looking for new traders. What you cannot imagine how much problems we have to find good traders in the asset management. We are looking for new traders, but there are none of them. Most of them are gamblers. They cannot prove that they follow any strategy for a couple of years. So, for example, if you want to get hired here in our asset management, my boss, he's coming actually 2 minutes ago. He entered the room. He will ask you, show me your track record. No, the back test. Your track record of the last 5 years. So you can show me your track record of your trading the last 5 years. Can you show me that? If not, go. Yeah, if you can show me, let me see what you're doing. what you did. Let me show you your risk behavior. Let me show your drawdown phase. Let me show what you do. You cannot prove it? I'm sorry, you have to go. You cannot imagine how hard it is to find real traders. They are successful for at least 3 to 5 years. And it's better to, and that's the sense, that's the real story beyond or behind the prop trading companies, that they're looking for real traders, but it's really hard. So if you have a big account, for example, and you want to become a good trader, yeah, then you don't have so much expectations. Why you should have that? Moderate profit expectations. Look, if you have 1% of 50K, it's $500. And I'm quite sure your life will be changed if you have $500 a month more on your account, on your private bank account. Or maybe if you use just a smaller risk management like 0.5% or maybe 0.2%, it's $100. $100 50K, you cannot make $100, not replaceable, not repeatable, and consistently with a $500 account. It's not possible. So if you have a big account, you don't need any leverage, moderate or small leverage. For example, in our asset management, we don't use any leverage because it's not necessary. It's not needed. So we don't need any leverage if you have a big account. And of course, if you are not driven by your emotions, you can really follow your trading rules. Professional attitude. What does it mean? So I show you, for example, let's go to the 1 minute chart. So you see, it's just a trade here. It's a trend. So we are on the second trend arm. We were correcting, you see it here with Fibonacci tools, we were correcting 100%. So the minimum level, we need a correction at 38%. So and then when the price turns around, we make an entry. We have the stop loss below the 0.3 here anywhere, and then we are good. Then we have our trade here. So for example, this is a perfect example right now, because you see, we were in, the price were moving up, yeah, and then falling down and ran into my stop loss. Oh my goodness, how stupid is this? Yeah, no, it's just a stupid trade. Yeah, it's just having expectations. It's just a game of probability. So that means, but the trend is not broken. Just to catch the stop loss here. So which means you have to make a re-entry there. So the same story again, stop loss below, and in a mathematical approach, the same risk-reward ratio on the upper side again. So just do it again. This is like acting like an idiot. Don't think about it. Just follow the rules. And this is way more easier if you have a huge account instead of your own private account. If you have funded money from any kind of prop trading company, you can have professional attitude, just doing your job. First of all, you need to have rules for that, but I'll show you my rules, by the way. Yeah, so how it works. How is it possible that you can win every challenge? Trading with larger capital is safer than trading with a small one. I think this is pure logic, really pure logic. Trading with companies' money is psychologically easier than trading with your own money, since you do not have your own trading risk. If you trade with funded money, with companies' money, you have absolutely no risk. Maybe the only risk is the fee you have to pay to get some account, yeah, but there is no risk. If you follow rules, if you have a proper money management, just do it. Yeah. And in my DAO company, in my DAO family, we do trading every day in 1 minute chart, 5 minute chart, and in hourly chart, and in 4 hourly, 6 hourly, and 12 hourly chart, and daily chart. And this also works in prop trading. It's also working. And it's so easy. It's a simple thing because there are no emotions needed, driven by emotions, because you trade funded money. Yeah. So determining the optimal risk per trade. I'm quite sure ladies and gentlemen, that everybody tells you the same story. If you ask how much risk should I take for one trade, and everybody's talking to you, yeah, 1 to 2%. Did you ever calculate this through? Is it really that easy to just shout out, yeah, 1%? How can you know that? First of all, you need to know what is the quote, what's the hit quote of your trading. That's the first point you need to know. So what is your probability quote? I show you something here, for example, this one. So you see, and that's just we document we record every trade we do. This is 1 minute, 5 minute, 10 minute, and then the hourly charts, the higher time frames. So you see, for example, that's the quote. Yeah, in euro dollar, we have a hit quote of 64%. In DAX, we have 58%. In GBP, in cable, we have 65%. Gold 45, Dow 62, and S&P 500 58%. So my question to you is right now, do you have such an Excel file? Do you have such an evaluation? Do you know about your roles, your own trading roles? What's your quote? There's a direct connection between that and how much risk I should take. Because if you have a drawdown phase, for example, you have 5 or 6 or 7 losses in a row, which is possible, especially in day trading, and you have, for example, you have 1% by risk, then 6% are gone. They're gone, done, finish, over, game over. So you cannot say easily, yeah, I take 1%. You have to know, first of all, what's your rules? What trading rules do you have? Like Fibonacci, like Elliott waves, or something like that. And then the hit quote. Yeah. And the next one, how many losses in a row do you have? I show you here, for example, let's go to the last day. It's 1 minute chart. Let's say yesterday. So yesterday, this is a gold chart. So you see we had 1 loss and 1 profit, 1 half minus, and 1 profit. Yeah. So let's get to the next day. You see on Monday in gold in 1 minute chart, we had 3 losses in a row. 3 losses in a row. So do you know that? How many losses in a row do you have or do you can have in your trading? You really should know that. Otherwise, you cannot determine how much risk you should take. It's very interesting, very important to know that. So, risk management requirements. Let's talk about that. It's about prop trading and your private account also. So, in most of the companies, you have a daily loss limit of 3%. So you see, if you have a daily loss limit of 3%, ladies and gentlemen, and you take 1%, and like I showed you here, we have 3 losses in a row. Yeah, trading is done for that day. You have no trading possibilities anymore. You should calculate this before you say, I take 1% risk. So, and most of the companies, and especially in my asset management also, we have strict rules about how much money we can lose. 6%, you have to, your customer is calling you, your client is calling you. Why do you lost 6% of my money? Believe me, such calls you don't want to have. You don't want to have a talk with your customer or with your clients in the asset management why you lost his money. Believe me, you don't want that. If you have a bulletproof on your desk, then you know you are in big danger of the money. So maximum trailing drawdown 6%. And is especially in intraday trading, if you trade in a 1 minute chart or maybe in 3 minute or 5 minute chart, there is always the possibility that you can have 6 losses in a row. This is absolutely possible. The rest is a lie. It's just an illusion. You have to calculate this. So, and there is another, how should I say, there's another secret why you should never lose more than 6%. Because 6% is the edge to come back to break even. As up to 7%, you need 7.1% to come back to break even. The edge is 6%. If you lose 6%, you need 6% to come back to break even. If you lose 10%, you need 11 just to come back to break even. And then show me the rules. And I know how hard it is to have 10 profits in a row. Impossible, almost impossible. Coincidence, law of probability, impossible. If you lose 25, or let's say if you lose 50%, and you know how easy it is to lose 50% on your private account. On an asset management, it's not possible because they have limits there. But as you know, everybody knows that, how easy it is to lose 50% of your account, of your private money. So, and then you know, you need 100%. You have to double your account to bring it back just to break even. We don't talk about win. We don't talk about profits. We just talk about bringing back to break even. And then gambling starts. That's the gambling attitude. And this is the point why the most of traders fail, because then they have to start with gambling to bring it just back to break even. Yeah. So that's the reason why most of the prop trading companies have their drawdown limits at 6, maximum 10%. Yeah, maximum 8, 6, 8. We make a limitation of 6%. Yeah. So now, and here we come to the optimal risk management, Instead of using 1%, we just use a trade risk per trade 0.2%. So this is everything calculated with 0.2%. So for example, yeah, so here, whenever we do our trades, let's say, for example, in Dow Jones, you'll see we have today in 1 minute chart, yeah, we had already, when we start the morning, yeah, today we had 2 profits. 2 profits today, and we just use 0.2%. How is it possible? Just follow the rules. Just follow the rules. Look at this one. Yeah, so it was an uptrend coming out of the correction, risk reward ratio, and we hit the target with 0.2% on a 50K account, $100, quick $100 during maybe 1 hour. So we use 0.2%. So that means if you want to lose 3%, you need 15 losing trades in a row a day, or maybe in a week, or maybe in a month. Who cares? Yeah. The day is just replaceable through a week, a month, a quarter, year, whatever. But if you're a day trader and you want to make trading for a living, then we talk about 15 losing trades in a row without any profit in between. 15 losing trades in a row. How is this possible? Tell me. If you have fixed rules like trend following with a probability of roundabout, show you again. Look, hit quote way over 50%. In average, 62%. If you trade in 5-minute chart, yeah, there's a little bit different. We need more time because we have less signals. But you see 53, 53, 59, 63 in Dow Jones, for example. Yeah. So it is literally impossible with the trend following system, including Fibonacci, to lose 15 trades in a row. It's literally impossible, absolutely impossible. And now you can double it. To lose 6%, you need 30 losing trades in a row. Literally, practically, statistically, mathematically impossible. Absolutely Impossible. So, and now you know how you can connect this. You can use 0.2%, but in the first place, you know what's my hit quote, how many losses in a row my rules create. And then you can play with the risk button. And if you say, okay, I will never have 3 losses in a row as a day trader, then you can go up to 1%. But I would never recommend this to you. Never, ever. Not in day trading. In 5 minutes, yes. Because in 5-minute charts with a trend following system, you might have 1 trade a day, or maybe 2. So it's impossible to have 3 losses in a row. But this is how you have to combine the holy trinity in trading. The holy trinity in trading is money management, your trade management, and of course the rules. Yeah, that's the holy trinity in trading. So, and this is the real secret. And most of the profit target is 10%. And if you have a broker which has not such stupid levels, you have to go through from level number 1 to 10, something like that. If you use Sabio Trade, for example, then you have just 1 challenge to master, to complete, and then you come directly to real funded money. You need 10%. And I will show you how to win those challenges with a pure trend following system. Yeah. So successful strategies. And this is a really conservative risk management, a really conservative risk management. And the rules are really clear. The rules are really clear. So please make a note. Rule number 1, we need a valid trend. That's rule number 1. We need a valid trend. So what is a valid trend? Valid trend is you have a move, you have a correction, you have a second move. Yeah. And as you can see in my chart, I use Heikin Ashi. It's really way easier to handle with Heikin Ashi than with this normal candlesticks. So if you want to make progress in trading, use Heikin Ashi. It's really simple. And it's also it's always working with Fibonacci as well. So rule number 2, you just make an entry in the second correction. After rule number 1 is their valid trend, you have the second correction. And then rule number 3, it's kind of simple. You are waiting until the correction is going deeper than 38% Fibonacci. Yeah? 38 Fibonacci, because that follows the rule, buy cheap and sell expensive. Guys, this is trading. Huh? This is really trading. Trading is a simple, stupid system. Buy cheap and sell expensive. If you want to go short, sell expensive and buy back cheap. It's kind of simple. Yeah. So therefore, statistically spoken, we say, as we have 38%, then the price becomes cheap. Yeah. That's why we wait until 38%. If the price is going deeper, yeah, fine, cool. The cheaper the better it is. Yeah. But at least 38%. So the next number 4, rule number 4, we just have 4 rules. Yeah. It fits, it's matched to your prefrontal cortex, which can just handle 4 thoughts at the same time, 4 rules. Then you wait for the turnaround. Yeah, turnaround in Heikin Ashi means the balance candle or the color changes again. If you don't trade with Heikin Ashi, then you use any candlestick patterns, bullish Harami, bearish engulfing, whatever there is. Yeah, it's easy with Heikin Ashi, balance candle, change of color, and let's go on. And then you set a pending order, stop buy or short, stop sell. So that's really simple rules, trend following. This is what the turtle traders did in the 80s. Yeah, but they used a kind of breakout system about the 20 line, 20 breakout strategy. Yeah, it's kind of simple, but we entered the market way earlier than the turtle traders did. Yeah, but it was a trend following. Guys, look the trends. Look the trends going up and down, up and down. They're always trends. The moment of the day you don't see a trend in your chart, the moment that market is closed, then there are no trends. But the moment the the market is open, there are trends, because it's the nature of trading, the absolute nature of trading. So let's say we use a profit loss ratio risk-reward ratio, RRR, of 2 and 1, which means we have a win rate. You need 2 of them. Yeah, win rate, which means the rules. What's your win rate? I showed you mine, around about 70%. That's my win rate. But let's say you have 2 crossing moving averages, whatever there is, or you're trading about the sun and the moon or whatever there is, then you have a win rate of 50-50. Yeah, just throwing the dot arrow, something like that. Yeah, so 50-50. Of course, then you need a profit loss 2 and 1, because a win rate of 50-50 and the ratio of 2 and 1, there is no step forward. Yeah, of course not. So you need 2 and 1. So that means we need a profit per trade of 0.4 and we risk 0.2. And let's say we make 3 trades a day. 3 trades a day. That means we have 66 trades per month. If you change it a day, a week, a month, a quarter, then of course it takes longer. The probability, the numbers are exactly the same. But let's say we want to make trading for a living every day. So we have to be a day trader. Yeah. So that means a 50-50, we have 33 trades in profit and 33 in loss. But we have a profit loss ratio of 2 and 1. That means 33 multiplied 0.4, we have a win of 32%. On the loss side, we have 6.6%. Yeah? Together, net profit at the end of the month, we have 6.7%. Yeah? That means if you need 10% profit to complete the challenge, you need round about 1.5 months or maybe 2 months. So show the reality. Look, this is the 1 minute chart, for example. 1 minute chart, as you can see, we make, every week, for example, in Dow Jones here last week, we had run about 19 trades. 19 trades, yeah? So that means you will have those round about 66 trades per month. But as you know, if you use a ratio of 1 and 2 or 2 and 1, then you need a long running trend, So you don't have this ratio, the stop at the last correction point at the same 1 and 1. You need 2 and 1. And this is really hard. It needs a lot of time and it's really, really hard. Guys, it's simple. Again, show you. We have not 50-50. In trend following with the 4 magic rules, we have a hit quote of over 50%, almost in average 65%. In average, 65%. Let's talk about that. And that means let's do it in a profit ratio of 1 and 1, not 2 and 1. Just out of the correction, up 0.2, trend continuation, ratio 1 and 1. It's way easier, right? Less time in the market, target closer, quick target. In 1 minute chart, maybe 5 minutes later, maybe. Yeah. So, and this is possible with the trend following win rate of 65%. And that means we just have a profit per trade of 0.2%. This is replaceable up to 1% if you want. Think about your drawdown phase and a risk per 0.2%. Let's say we have the 50K account. 50K account, yeah, means $100. Look, and if you use, look at this one. So for example, in Dow Jones, we had in last week, we had 10 trades. We had 10 trades in profit and 8.5 in loss. That means it was $150 last week, just with 0.2%. Yeah, just with 0.2%. But there's another week, the week before, look, we had 16 profit trades and 9 in loss. That means we had 7 trades, which means $700 a week. Yeah, and then you need just 10%. And now you can imagine if you put it up, if you increase it maybe to 0.4%, how quick you can master every challenge without losing the account. Yeah, but let's say 5 trades a day, which means we have 100 trades per month as a day trader, by the way. Yeah, so now we have a win rate of 65%. That means we have 72% in profit and just 38 in loss. On the average side, that means with 0.2%, we create 14.4% in profit and 7.6% in loss. The net profit, like the same, but way easier. With the profit loss 2 and 1 and 50-50, we had 6.7. Now we have 6.8. Yeah, and just a less distance to my target. So that means, on average, 10% profit complete the challenge. Yeah, how is this possible? Just with this simple strategy. Simple, really simple strategy. So if we make this conclusion, then we can say, why in God's sake you should use your own money? Yeah, large capital and conservative risk brings long-term profits, and small and large leverage bring just huge losses. Yeah, so it is more reasonable to trade with the company's money without risking your own capital. With our strategy of the trend following and a moderate risk management, you will win every challenge. And then use maybe your broker. So I want to show you it again. The strategy is really simple. The strategy is really simple. So you have a trend, move, correction. This is not the trend yet. You have to wait until the second move goes higher than the last high if we talk about a long. So now you have rule number 1. This is a valid trend. So and now we need rule number 2. We use the second correction. We use the second correction for this mathematical strategy. We use the trend following system, but we don't follow the whole trend. We just use the high probability when the market is coming out of the second correction and goes into the trend continuation. That's the highest probability of almost 70%. And this distance we use for this strategy. And then we say Fibonacci tools, yeah, we need 38%, and then we need to turn around, and then we use this distance, and we say, okay, if we enter the market at least 38%, then the stop loss is below the last point, correction point, because if the price is going lower, then of course the trend breaks. Then the idea is gone. Yeah, and the same distance, 1-in-1 ratio, we use to set the target immediately, and we get it. And this is a simple strategy. You use Fibonacci to determine the 38%, and then you say, okay, the same distance to my stop loss is the distance to my target. Yeah, it's really that simple, ladies and gentlemen. It's really that simple. And we do that. Look, we did it this morning already here, for example, in 2 times. 2 times. Look at this one. Just 2 simple examples. Look, that's S&P 500 in 1-minute chart this morning. That was the first move, the first correction, and then the second move, which goes deeper than the last point, point here. So, and then Fibonacci, we measure Fibonacci, we need at least 38%, and it goes higher up to almost 76%. So requirement is 38%. And then we wait until the price turns around, and that was a change of color. That means the correction is I'm sorry. And then the color turns around to red. It's going short. And that was the signal, okay, the correction is coming to the end. And then we say, okay, entry there. And we have a distance, of course, a price distance of 0.08%. And we need the same distance to reach the target. And here we go. We did it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 10, 12 minutes later, reach the target. It is really that simple. So you don't need any complicated Elliott waves. Just use trend following system. Learn how to draw the trend. Then you use the Fibonacci. And most important is that you use this conservative risk management. Yeah. And here you can really turn a little bit on that button. If you say, I don't have more than 3 or 4 losses in a row, then maybe you can go up to 0.4%. It's in your hand. It's just up to you. You can play with 0.6%. It doesn't matter. As long as you have rules with a high win rate. Yeah, 50-50, be careful. But if you learn the trend following system with the Dow Howe company, with the Dow family, for example, it's really simple to complete and win every prop trading challenge. And if you say, no, I don't want to use funded money, I want to have my own account, because maybe you have 100,000, 100K or 500K in your private account, do the same. Yeah, of course, that is your own money, but the more money you have on your private account, maybe you have more money, yeah, then use the same. You will never destroy your account. Never. It's impossible. Absolutely impossible to destroy your account. You lose your account. And if you are if you don't have that much money, yeah, then please use the new industry and come to Sabio Trade, for example, or maybe in USA you have other brokers, whatever. But this is one of the partners I work. So Sabio Trade, and then you will have the big chance to do this. And you see, it's simple. And there was another second example. Then we are done. 3 minutes I have to go. And you see, hi. No, not about you. So I love my teacher here right now. He's coming around. I have also webinars. Oh, he's an Elliott wave trader, by the way. I don't have any clue what he's doing, but he makes a bunch of money.
I'm a surfer.
I'm a surfer. Yes, you're a surfer. That's really cool. So you see, second trend arm in the correction, at least 38%. Small stop loss to the last correction point and up to 0.2. And you see, we did it. So, and this is what you can do with this, trading strategy. That was my point. If you want to learn more, then visit my homepage. David put it into the in the chat already. If you have more questions, you can call me, you can send me an email, and let's do it together. That's why we call it Dow Howe family, because all of us trade exactly the same. No one is calling long and the next one is short. No, we have one rules. We are trend followers like the turtle traders, and we all stick to the rules, to the same rules. And believe me, we made a lot of money with that. And you can learn it because trading is a craft, just a craft. Learn how to draw the trend and learn on the rules and do it together. Don't try it alone. It needs a lot of time and you will lose a lot of money. So invest in your education and then we can do it together. I want to say thank you very much. Thanks to David that I could join this great event. And it's lovely to start this trading day for you. And many greetings to USA. And as always, have courage and be kind. And may the force of the logic be with you. See you next time. Back to David.